You were listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 19th of September, 2016. We are glad to be back in the saddle. It was wonderful to have a couple of weeks off. As we told you in that last transmission, we were going to see what we could provide to you while we were at sea for 2 weeks, but the satellite was not working very well. It was extremely difficult to get much internet connection at all, but the advice we gave you as we took that 2-week hiatus was exactly what you needed to hear. It held up based upon what was going on our weekly charts, and we so appreciate you being back with us. We will again continue to bring all these broadcasts to you. Looks like we will be going back to sea probably in February, and that will be a teaching cruise. It'll probably be 7 days somewhere in the Caribbean. We are working on a time schedule. We'll let you guys know when that will be as soon as possible, probably late February, early March of 2017. Those of you who are interested, you can start sending us emails. We will put you on the list. There will be very limited space. There will be instruction, probably every other day or so. Lots of questions, lots of reviews, everything you'll need to know to pull what we do together in your own mind and really improve that skill set. We'll get that all out to you as soon as we can. Now let's jump right in to what's been going on these first 2 weeks, actually ending 3 weeks in September. First week in September ended again after only 2 days on the 2nd of September. Then, of course, we had the following week that ended on the 9th, and then we have the past week that ended on the 16th as we go into Monday, the 19th. What do we see going on? We're going to go through our 3 big indexes. That is the total market, IYY, the S&P 500, SPY, and the NASDAQ 100, QQQ. Then we're going to jump into gold. We're going to look at them on our weekly chart, and we're going to look at them on our daily chart to see sort of how they fared throughout the week. Then we're going to go to the news. The only time we talk about the news, those of you who tune in all the time know we talk about news on our weekly review and forecast, what affected the market over the last week and what the news making and moving events may be over this next week. And we have one major thing with a Fed meeting and a possible rate hike or no commentary by the Feds that will affect the markets, probably a good deal. We'll talk about that, and we'll go through all of these things. So let's jump right in because we only have a few minutes. IYY, Total Market Index Fund. What do we see going on? Market crossed over going down as we predicted back on the 9th of September. What we saw coming with the break in the weekly trend line along with that 2-day trend line break. So we're in our second confirmed week of down moves. We've actually drawn for you a yellow down trend line. We also have the 2-day trend line breaching the weekly trend line. Whenever we see those things happen, that is always a significant note to you that we are in a downtrending market at that point. And it is a great jump-in point when you can find those, if you remember us talking about that before we took the hiatus. That is extremely important when you can find that happening. All right, now let's continue to move along. Let's look at what went on throughout the week on the daily chart. What did we see go on? Well, you can see on Monday the 12th, following a lot of down move on Friday, the 9th, the market trended down, continuing down Tuesday and Wednesday, and then recovered a little bit. Lots of indecision on Thursday, then up on Friday as far as our Heiken Ashi type candlesticks go. But again, even with the bit of up movement on Thursday and Friday, didn't even hit where the market started moving down on Wednesday. So still in a confirmed down move. Again, offering some possible opportunities, at least looking at the daily chart, with this pullback to maybe jump back in if the market trends down again. But again, lots of caution we're going to talk about here in a minute, depending on what happens at that Fed meeting next week. Now, let's go from the IYY, the total market. Let's drill down a little further into the S&P 500. Remember, 500 big companies, lots of the volume of the market. We see also it had a double cross on the trend line with the 2-day chart crossing over the weekly, confirmed down move, just like on the total market back on the week ending the 9th, and second big week of down moves with the week ending on the 16th of September. Now, if we look at what's going on the daily chart with the S&P 500, again, similar to the total market, we had big down moves on Friday, continued on Monday, Tuesday, Wednesday. It's Friday the 9th, and then the 12th, 13th, and 14th. A little bit of an up move on, well, really a spinning top on the 15th, and then another down day on Friday. So again, well below the 2-day trend line. The daily chart is, of course, well below the weekly chart. Again, that's the way the market moved over the course of the last week on the S&P 500. Now let's take a quick look at what went on with the Qs. The Qs now, that is the NASDAQ 100 technology stocks, have not crossed over going down. They have breached the 2-day trend line, but the weekly trend line, but there has been no confirmed down move yet on the weekly chart. We don't have a crossover. We do have the derivative oscillator losing lots of energy. We did have what looked like was going for a strong down move around the 9th, maybe going into the weekend in the 16th, but wasn't enough movement down, although we do have spinning tops both the 9th and the 16th. What do spinning tops mean? Well, just like not as much as we see with a doji, but spinning tops mean indecision in the marketplace. So be careful. The market is trying its best, particularly in technologies, to hold itself up, and it's done so far. In fact, if you look when the market was up the last up week, back on the 19th of October, it has really hardly gone below that movement, even over the last 4 weeks. So the NASDAQ 100 has been sliding sideways. So continue to watch that. And again, if we have confirmed down moves, you might find a really good jumping in point. What do we see going on as far as the daily chart? Well, big down move in the market on Friday the 9th, followed by down moves on Monday. This is again in the NASDAQ 100 technology stocks. Then up moves on Tuesday, Wednesday, Thursday, and Friday. Big moves up on Thursday and Friday. Actually, the daily chart continuing to move up. Hasn't crossed over yet, though, even with all that up movement, because of so much down drag and down movement, particularly down, big, strong down wicks. We have not yet seen a crossover going up on the MACD. Derivative oscillators lost some of its huge down energy, which peaked on the 14th, Wednesday the 14th, but still hasn't crossed over going up yet. So continue to watch those things. Remember, the NASDAQ 100 is still in a confirmed down move on the weekly chart. And as we say, all things being equal, the market tends to move in the direction of the biggest chart. That is the weekly chart for us. We don't look at anything bigger than that. Why? Because it's just really hard to find a trend. I mean, if you can do it, do it. Tell us about it. We're happy to share whatever knowledge you glean. Again, folks, this is all about finding things that work so you can make money in the market, keeping it as simple as we can and finding things that work. And I'm telling you, if you can read a chart, look at this. I mean, if you can read a chart and you can find crossover points going down and ride that downward momentum, isn't it beautiful? Now, the daily chart's not nearly as easy. One reason we don't use it is because we prefer to use the weekly and the 2-day chart. It seems to work a whole lot better for us. Now, after that, we're back on the weekly chart, and we're going to go to gold. What is gold doing? Well, when we look at the weekly chart, we can see that gold has been sliding sideways quite a while. It peaked back on the week ending the 8th of July, and then gold has slidden sideways for many weeks. It crossed over going down the week ending the 19th of October, and has continued to move down, but struggle again, a lot of sideways sliding, but it has gone down pretty substantially since that week. The gold high that week was 129. As gold ended the week, the low was 124.67 on the as far as the week ending the 16th of September. So again, some down movement. Again, gold is in a confirmed down move right now. If we look at what's going on gold on the daily chart, we can see that gold crossed over going down on the 13th. That was Tuesday. Gold peaked as far as the last 2-week movement on the 7th of September. And then again, like the rest of the market was down on Friday the 9th, it was down. And then it trended down pretty much the rest of the week, a little bit of a bump up on Wednesday the 14th, but then big down moves in gold again, crossing over going down on the 13th on the daily chart. Now let's jump away from the chart. So again, those of you who are using our daily worksheet, please make sure to note where the weekly charts are so that you can refer to those throughout the course of the week, because as we said, all things being equal, the market always tends to move in the direction of the big charts when you have confirmed down moves. Now, let's jump and talk about what affected the markets over this last week. Well, lots of soft data coming in from the United States. Retail sales, industrial production, quite sluggish in the U.S. What does that do? Well, the Fed has been talking about potentially a rate hike coming up in these short-term interest rates, but the soft economic data and these down markets, as we've been watching, folks, you don't have to listen to the news when you can read the charts. That's what we keep telling you. What do they say on Wall Street? You buy on the rumor, you sell on the news, which means the trade's already passed. That's why we read the charts, just like the big boys do up on Wall Street. So what do we see going on? Well, we see that we've got lots of soft economic data, market volatility, all those kind of things we're being told are lowering the odds of a move at next week's Federal Open Market Committee meeting. So again, all of that down information is probably not going to cause them to raise interest rates. But again, we'll wait and see, and we'll talk about that date and how you need to prepare for it. Okay, in just a minute. UK economic data. Well, it shows that the UK, despite all the dire warnings and how the British people were going to be all in soup kitchen lines, well, that's not happening. In fact, in contrast to the US, UK August retail sales only dipped 0.2%, but what happened with sales in July? They were actually revised even higher, and it's the biggest gain they've seen in 14 months. Additionally, UK unemployment rate held steady at right around 5% in the 3 months up to July. So again, things are looking okay. What do we see going on in China? Well, it posted solid sales and good production data. Their economy showed signs of modest improvement, if you can believe anything from the Chinese and their totally government-run and tweaked economy. They're claiming that industrial production advanced 6.3%. They're claiming that retail sales were up well over 10%. So again, that's what we're hearing from them. What about oil? Well, should remain in a surplus until late 2017. Household income in the U.S., after dismal years, it jumped up right at 5.2% in 2015. But even though that's the largest annual rise on record, get this, income, the increase was the first in 7 years, but remains 1.6 below the levels in 2007 before the recession. So that recovery, it ain't happened yet, my friends, and I'm afraid with what we see on the horizons and understanding what we love to read every day, which is a Stock Trader's Almanac for 2016, you can go ahead and still get a copy. It's still valuable to have, and particularly jump into those pages and read the presidential cycle. The cycle that you can count on the most of all of any historic things that affect the market. Because once we get past this election year, it's going to be a tough 2 years. So again, make sure that you are prepared for that. That's why you need to learn to read these charts so you can make money when the market's going up or down. Now again, we don't give trading advice. We give educational teaching. We want you to practice, to learn how to do this with virtual trading. And then, and only then, when you feel you're competent, you can start making your own decisions. Not, again, we are not a stock calling service. We don't get paid anything, and we are not about to give you trading advice of any kind. What else do we see going on? Well, as we jump into what is going to happen over the course of this next week, you need to pay attention to a number of things. Housing starts and building permits. That's going to be reported on Tuesday, the 20th of September. Then the big thing on Wednesday, the 21st, we're going to see the U.S. Federal Reserve holding its rate-setting meetings. They're going to conclude on Wednesday, the 21st. So pay close attention. Pay very close attention. There's no telling what the effect will be on what they say. Those of you who have winning trades, you can sure close those out or part of them out. Take some of your profit in case the market swings crazily based upon what's said. Those of you who want to be gamblers, hey, go to Vegas. Don't try to do that in the stock market. So again, that's a big day. Also, the Bank of Japan is going to be concluding its rate-setting meetings on that same day. U.S. existing home data is going to be reported on Thursday, the 22nd. We're also going to see Mario Draghi, the president of the European Central Bank, speaking on Thursday, the 22nd, and then the flash purchasing managers indices are going to be released on Friday, the 23rd. What does all this mean to you? Well, if any of that is super good or super bad, but for the Fed meeting, it can surely affect the market. The Fed meeting on Wednesday is going to be the real mover of the market coming in and out of that. If the Fed does not raise the interest rates, what can you expect to happen? Well, the market's sort of already predicting they're not going to do that. Now, can they jump in and exuberantly push things up? Absolutely. It's going to be important to pay attention and to watch. If you're in a down trade in particular and things are looking great on that down trade, and again, if you don't know what I'm talking about, how do you make money? What is a down trade? That means you're in an inverse fund. Just as you have indexes like QQQ, there's also something called one of many called QID, which is a double short, as I call it. It means that when the Qs are going up, it's going down. Conversely, when the Qs, that is the NASDAQ 100, is going down, the QID is going up at twice the rate. It's a double inverse fund. You don't know what inverse funds are about? Please go to our website or go to YouTube. We've got great trainings there at our Charting Wealth channel. Again, chartingwealth.com or Charting Wealth on YouTube. You'll understand what that's about so that you can make money, and again, virtually trading for right now until you get good and you can make your own decisions. We want you to practice. We want you to go online, open yourself up. You're on pretend account. You can do virtual trading. You can go online to any of the online brokers, set up an account for free, fund it with $1 million in virtual money, and then you can start learning how to trade. All those brokerage firms want you to go to their sites and to jump on and start doing this, because what is their hope? That when you learn how to do this, you'll start putting real money in and they'll be able to make commissions off you investing your money. So again, what's the smartest thing you can do? That is to follow us every day. Listen to the weekly review and forecast. It's put out once a week, typically sometime on Saturday night or Sunday. And then every day spend 10 minutes or less with us. Fill out your daily market worksheet. Understand and know what's going on in the market. Practice and get good at this. And once you get good, then you've got a skill set that is, it's worth potentially millions and millions of dollars to you. Is it worth 10 minutes a day? Yeah. Do you have to spend 10 minutes a day? Yes, you do. You have to spend it every day. Getting into the market, listening what's going on. Can you find 10 minutes? I don't know. Is it worth financial independence to you? Is it worth being able to read? Literally, being able to read a stock chart is the equivalent of having a roadmap to riches. Is it easy? Well, I don't say it's difficult, but it takes the one thing most people don't have, and that's perseverance on a daily basis. Why are most people fat in our country? Because they don't have perseverance on a daily basis. You have got to have it. If you don't have it, stop listening. You don't need to waste your time. You're just pipe dreaming. Go to Vegas and gamble. But if you're really interested in making this work, you got to dedicate yourself, and you have to do it on a daily basis. You cannot fail in that. And you'll find over the course of time, how long will it take? I don't know. I don't know how quickly you'll get it. I don't know how well the market will be going. And when I say that, there are markets that are readable, and there are times when the market's not readable. We don't guess. We trend follow. When we find trends that work and we can get in and ride them either up or down, great. When we don't trade. We don't jump into virtual trades, virtual investments. We hold off. But when markets are doing what we hope they'll do and what we predict them to do day in and day out, things are working for us, then we have the opportunities we want. It's that simple, and it's that complicated. As Einstein said, make things as simple as possible, but not simpler. That is exactly what we try to do here. Hey, we appreciate you. We love to hear from you. Write us at chartingwealth.com. Go to the website, sign up for our daily newsletter. We'll email the video to you every day. You'll also receive, by going there, our How to Read a Stock Chart video link, which you need to listen to. It'll take you about 15 minutes. You'll also get the layout that we use at freestockcharts.com. You'll also get a link to that, and you'll get a link to our daily market worksheet. So we really appreciate you being with us. If you want to help us out, we ask you to do two things for us. Go to our YouTube channel, subscribe. We have to get up to 1,000 plus subscribers, and we will then be able to provide you with proprietary videos. Is that not cool? And again, that's going to go out to those first 1,000 subscribers. Well, I know we have thousands listen every week, but YouTube requires us to have 1,000 hardcore subscribers. In addition, please go to iTunes, give us a 5-star rating, say something nice about us. We so appreciate you. Take care. God bless, and be sure to listen to the daily review for Monday the 19th. Again, that'll be coming up in just a few minutes. Take care. God bless from chartingwealth.com.